I'm Robert Graham with the Smart Stocks Online Talk Show. We are putting gold and silver in the spotlight for this edition of the program. Joining us is David Morgan of silverinvestor.com and publisher of the Morgan Report. David, welcome back to the program.
Great to be back with you, Robert.
Okay, well, the casualty count, David, right now is not pretty. A lot of gold equities showing losses of 20, 30, 40%. The price of gold at the time of this recording down about 17% year to date. Silver tumbling 28%. Yet I watched a recent interview that you did, and you were sounding quite optimistic, at least over the longer term, saying this bull market is a long way to go. Explain.
Well, the main premise of what I said is that a bull market, first of all, will shake off all kinds of people on the way up. And having been through one bull market already, I was very much aware of what the sentiment was like from the 1970 to 1980 bull market. Mm-hmm. And that was when gold went from the fixed price of around 35 all the way up to nearly 200. It subsequently fell off and went down to almost 100. And then it took about 2 years or so, or more actually, to come back up to the $200 mark. And so there were a lot of people that were very, very upset and concerned and convinced that the gold market was over. They should have got out when it was, at 150 or 160, 170 or close to 200, trying to pick the exact top. And yet, when it hit the 200 after that long dragged-out consolidation and finally working its way back up, a lot of people, when it hit 200, were convinced it was a double top. Mm-hmm. And sold out there and broke even. So they'd held the whole ride, maybe buying at the top at 200 all the way through back to 200. So that's it. I just can't stand gold. Never should have got in there. I'm getting back into XYZ investment, only to watch it go from the 200 to the 850 mark in a very relatively short amount of time. And I think that's what we're going to see again. I do think we probably have a few more months, perhaps. We might have to get into the fall, maybe even the end of the year. I really don't know at this point. Till we are working our way back above it, these levels that we've just recently gotten hammered from. So let me be very clear. From the $15.50 level in gold, the $26 level in silver, I'm looking for us to be above those levels, both the metals, by the end of the year, and I think sooner, but time will tell. Once we get above that, I think we're on our way, not rapidly, but we will work our way back. And eventually, gold will get back up to the more realistic high it had, which was about the 1920 level. Silver will work its way back up to the $48 level. And there'll be people there that said, geez, gold is making a double top. And I'm even. I haven't broke, I broke even. I paid the top dollar for it, but I can get it back. I'm selling out. It took me, 2.5 years or 3 years to get even, but I'm out.
Right.
And that's probably about the time gold will start to accelerate from, say, the $2,000 level, roughly what I just outlined, up to 4,000, 5,000, 6,000, who knows, and away we go. So it's a typical bull market activity. I've never seen a bull market that topped out without a mania, panic buying, hitting the front page of a Newsweek, Time Magazine, the Globe and Mail doing a 3-page feature on gold, that type of thing. We didn't see any of that when gold was at the 1900 level. Very little talk about silver, hardly in the financial markets. The BNN does a better job covering the silver market than probably anybody else, but still we still don't hear a lot about the metal. So, Robert, from all I know and all I've looked at in 40 years of being an investor and studying these markets continually, I really don't see where we've really had that top. Now, can I be wrong? Sure, I could.
Okay, now
David, I just don't think we are.
Okay, David, one of the hot topics right now is quantitative easing. Every day, speculation swirling about when the Federal Reserve will curtail its massive bond buying program. What's your gut feel as to when the Fed may put the brakes at least down a little bit harder and slow the bond buying? And when it does, what does that mean for precious metals?
Well, one, I don't agree with anyone that says that they're going to stop or even slow down. I think it's rhetoric. I think it's a test on the market, trial balloon, whatever you want to call it, to see if they can get a little control into the markets. But I don't think they really have any intent to do so, especially if Bernanke retires and this Janet Yellen gets in, I mean, she'll make Helicopter Ben look like nothing. She'll be supersonic Janet. She's not going to just drop them from helicopter. She's going to take the Concorde out of the museum and flush it full of bills, and they're not going to be hundreds. They're going to be $1 million bills. I mean, I don't see it slowing down, but the problem is, and this is very important, is it isn't a function of how much money they're printing, and it's, you know, one of the biggest things that especially the Austrians get into, and I'm an Austrian, it's the velocity. It's where the money is. Right now it's sitting on banks' balance sheets. It's not getting into the economy. Now, it doesn't have to get there for there to be a pickup in inflation, but it's primarily what drives it.
Right.
But the velocity could come basically out of nowhere. It does not have to start in the United States. Could happen overseas. And it looks like it's starting in Japan because Japan has this insane 2-2-2 policy. They want to double the money supply in 2 years and get inflation above 2%. I mean, they're basically saying to the world that we're the trial balloon, we're the case. We're going to print until we force the money to accelerate in velocity, so the turnover. So once it starts, it can catch fire very rapidly. And at that point, will Ben, if he's still in charge, want to put on the brakes? And the answer is sure. He might try it then, but it'd probably be too late. So, you know, having, again, looked at this stuff doesn't mean I'm right, but it sure will put up the argument that we have never had a paper monetary system that hasn't had massive problems in the end. And we're seeing that because there's still uncertainty. There's still enough people like me that'll say, no, it's not over yet. It sure might look like it. It's sure scaring you out. You're sure worried, and all of those things. And all of those are valid. But the game isn't over yet, in my view, by a long shot. And unfortunately, the last thing you want is to have had a decent precious metals position, maybe at a paper loss, selling and taking that loss only to come up with a handful of paper and finding out at the end that you're holding a fiat fiction rather than a physical reality. I'd hate to see that happen to people.
Okay, and what should that precious metals position be in today? Where does the smart money go? You're telling people that this is an opportune time to put money to work in the precious metals area because the bull market, in your mind, has a long way to go. Perhaps you got to be patient, and you're going to experience some bumps along the way. But what does the smart money do? Does it buy gold stocks, or does it buy physical bullion?
Well, Robert, the best place to be is to be in the equities, really. But I want to be consistent because I've been doing these shows for 13 years or so, and I've always said you should have a physical metals position. So assuming you do. And the other thing is that people tend to overload. I mean, I've been pretty consistent. I think I've been very consistent that, 10% is probably enough for most people. If you're a super bull, then 20%. But, people put, where else should I go? What else can I invest in? Well, there's always opportunities out there. There really are.
Right.
Where you really want your money is in solid companies that have a good cash balance right now and are making profits now at these low metals prices. That's where you want to be. So be careful, and spread out. Do your homework. If you don't do your own homework, or even if you do, you might get some validation by picking up some reports from people that are professionals within the industry that can help you make a good, sound decision. So that's what I would suggest, Robert, is that you invest carefully and have a good time horizon. It's not going to be day after tomorrow. I mean, people got used to the easy money in the bull market. And the easy money's been made, but the big money lies ahead. Unfortunately, the big money that lies ahead is going to be rather treacherous. All these bull markets get into these type of bubbles, as you well know. I mean, Robert, you're very sophisticated, follow the financial markets very closely, and I'm sure you've seen it, and your listeners have as well. You see what happened in the tech wreck. You see what happened in the real estate market. These markets really can accelerate, and all of a sudden everybody wants the same investment. That's the time to be selling, not buying. And yet, of course, there's lots of buyers at the top until they run out. And when they run out, it can come down very quickly.
Indeed. Well, that's a good way to wrap it up, David. Thanks very much for this. We will catch up with you later in the year. Appreciate your time. Thanks.
Robert, thank you.
That's David Morgan of silverinvestor.com and publisher of the Morgan Report. You can find him on the web at silver-investor.com. And to get all the latest analyst and CEO interviews from Smart Stocks, make sure your contact information is on the Smart Stocks e-alert list. We invite you to fill out the form on the Smart Stocks website. I'm Robert Graham, and you've been listening to the Smart Stocks online talk show where companies come alive. For more corporate interviews and analyst insight, visit us online at www.smartstox.com.